Okay, sorry about that, folks. We had a little technical glitch, but I was basically asking Victor then, as a trend follower, as you're looking for a crest or a change in trend, either from short to long or long to short, meaning up to down, down to up, or staying away from those flat periods. And as trend followers, you tend typically, I believe, Victor, to be a little late. You're not necessarily catching the top or the bottom.
Right.
And you're really going for that, juicy middle part of the sandwich is really the goal. And that's one of the ways that you work to eliminate risk, or at least not eliminate it, but shrink it and squelch it, as I always like to say.
Right. We agree with that philosophy about, you don't want to pick the bottom and you don't want to pick the tops. You can't do that consistently, but you can, using your proprietary trading methods and signals, pinpoint where the trend is actually developing. So you don't actually feel bad about not missing the bottom or the top. You're going to be in it, as you said, for the meat of the trade.
And and again, this is a tool that I try to share with students of mine, and talking about trades, whether it's a monthly chart, weekly chart, down to I don't go any smaller than a 5-minute on an intraday, but you're either trending up, you're trending down, or you're not trending anywhere. And I want to play a trending up market, I want to play a trending down market, and I want to move on from an asset class that isn't moving, Victor. And that could be intraday, or it could be on a longer term 240-minute chart. But as you said, your PNW's focus is going to be on the longer term trend. So there's not a lot of trading going on. It's more management of core positions. Core positions, again, being long or short, and then managing that risk within said position, and taking profits along the way, and rebuying, and that's all part of running, I'm sure, your business on a regular basis. What kind of tools will the traders and the CI, Chief Investment Officer, be using? Can you give us a little flavor there?
Well, actually, Hong, he hasn't completely fully disclosed the tools, but he's got a proprietary trading system based on very similar the tools, I believe, that Richard J. Dennis developed. I think that he is very aware of markets that have more volatility to them than others, and he uses the average true range of that market to decide where the stop management loss will be placed. And so I think he uses technical indicators that are going to be very similar to what people like Richard J. Dennis have used. And that means you can pyramid if it adding contracts if the trade is moving in his direction, and he can decrease contracts if they're not.
And are there a lot of computer-based models that are, kind of finding these setups and systems that are used to
Hong Hee will plan to be in tracking. Will be tracking over 30 markets at some point.
Okay. And
that's where I think his proprietary method will discover, where the trends are occurring. That's where I can help him with the trend analysis.
Yeah, and again, in a market like we're in now, you could have cocoa being a great trending trade, cotton, coffee, things that typically, haven't been, there's more cyclical time-wise, but these things have been having great trends the last few years, both up and down. Cotton's another one that you haven't seen in years. And so I've got to ask you, is this because a lot of the smart money is kind of moving away from equities? I think equities have kind of gotten a little frothy. Obviously, we sold off here, and that kind of has cleared that up. But, a lot of it is, again, based upon what's going on in the intervention of world markets, not just the U.S., but everybody is pumping money into the system right now. So,
I think with the advent of major consumption in the agriculturals from countries like China and India, Africa, those commodity trends have actually emerged over the last 10 years where, to give you an example, when Richard J. Dennis was running these two funds, Collins Futures Fund number 1 and number 2, he had 2 successful years, and then all of a sudden those commodity markets stopped trending and actually started reversing, and he had losses. He suffered a $10 million loss in 1987 because he didn't follow his own rule. He broke some of his old rules. So the key to that story is don't double down or double up. Follow your rules and don't break them. But since Jim Rogers has been talking about the great commodities boom from about 10 years ago, he's been actually right on in terms of consumption of commodities on a mass scale will tell you where to go. So you're right. Hedge fund managers have gone into commodities as a result of what they see going on in the world today.
Yeah. There's a lot of flavor going on in those areas, and I don't think that's going to stop. I mean, I think that is the place where it's. I always say we're going into a decade or two of trading real things, and unfortunately, there's a lot of not real. There's a lot of not real equity stocks out there, especially in the U.S. markets and worldwide. I don't mean that they're not real, but their financials to me aren't solid. Whereas people are going to still continue to eat corn, consume oil, and look for alternative currencies to operate their businesses. And as the world becomes smaller and people choose to live where a bank isn't charging them to transact their cash and turn it into something I can use in my debit card.
Well, I saw one of your tweets where you were really disgusted in that when your son went in to take in his coins for redemption at the bank, they charged him 3%.
Yeah, well, and then I continued that discussion with a local coffee retailer that I buy coffee from or two every day. And he said, well, that's nothing. He said, every day I make a deposit. If I deposit more than $5,000 a month, I have to pay $15 per deposit of cash. I'm like, so you pay the bank to take your cash. And to me, that is ludicrous. And so the reason I bring this point up is not to harp on the brokenness of the banks, although that is a key component of it. Their balance sheets are clearly corrupt. So how can you invest in equities that across the board, these are supposedly the financial institutions that watch and monitor the finances and the balance sheets of said publicly traded companies? How can you have any faith in that system? So I'm all aboard, and I have been all aboard futures and commodities for the past 10 years because at least I can get a handle on risk and the liquidity that's involved with traders. And
well, as Jim Rogers would say, when you're trading commodities, you've got your stake is in something physical that can be seen and followed in a much different way than a paper asset would, like our dollar printing Federal Reserve and currencies across the world. And actually paper assets include bonds, I guess, in a way, and also stock certificates. So what concerns me today is that if we're in a deflationary environment where the 3-month Treasury last week briefly traded at 0, how low can you go? Can you go into negative numbers? Well, when Japan had their crisis and the market tanked, what was it, 1998?
Yeah.
They decided to lower interest rates to 0, and they thought everybody would become flocking back into the banks to renegotiate mortgages and buy more houses, and nobody showed up.
Right, and that's happening
we're
here.
Kind of in a similar position today.
Yeah. Well, not only are they not showing up here, but the banks know that their balance sheets are so misstated, even though they're legally not. But they know what's really lying on them, that they don't want to even lend because if the rules change, they would be upside down in a heartbeat. So it's a scary time.
And I think that's why there's problems and discussions right now about Bank of America and J.P. Morgan, and also in Europe with SocGen, the French bank.
Yep.
Because the CDSs that they own, when the spreads get so wide, the people who trade those every day, they know what's going on in Europe.
Yep.
And they get real wide. That tells you there's some underlying risk that hasn't been revealed yet.
Right.
As you said, the banks don't want to give you their true balance sheet out front.
Right. So interesting time and a good time to be looking at, again, up-and-coming CTAs, Victor, and I appreciate you coming on. I've got to ask you a couple more questions as a music fan.
Sure.
You mentioned when we were talking about Murray math and the relationship between Murray math and Fibonacci and all things in life, but how do you see that playing out in music with, the counts and the eighths, the time frame?
Well, if you think about it, Murray math divides his system into, 1/8. So he goes from 0/8 to 8/8, 0/8 being the lowest end of a frame, considered a frame or a cube. Mm-hmm. And you frame your market in that cube. So if you frame the market 666 in August 9th low, and you use 750 as the 0/8 line, it's trading at what Murray math calls the minus 1/8. And that's not the same thing as the plus 1/8, which is above the zero line.
Right.
So you're deep on oversold conditions. And if it starts making a reversal, basically where you are in the scheme of that frame.
Okay.
If you see it go to 1500, you're now at the 8/8 level.
Yeah.
To give you an example, and you're at the top, so you may want to be looking for a reversal. So those eighths actually reflect the division of the musical octave.
Okay.
And in terms of vibrations of where the keys are hit on your keyboard, you have actually Fibonacci relationships as well. You have the 4/8 and the 5/8. The 5/8 is very, very big in the musical scale, and that is to me, very close to a Fibonacci relationship. So I always told people that there are many techniques out there. It's up to you as a trader to decide which one you want to be working with, which one you're comfortable with, which one you want to understand better. But they all come up to the same thing. They end up showing you similar indications throughout the year while you're trading during the day. And I'm a big fan of Fibonacci as well.
Yeah.
So to me, those are the natural laws that occur throughout, the history of intellectual development for trading. You learn the natural laws and where they fall in, it may help you as a trader.
And that's, again, where technicals work because of the human, psychosis and our, the way that we behave over and over again. It doesn't matter whether it's today or 150 years ago. We're still hardwired, unfortunately or fortunately, the same way. And that is why Fibonacci and Murray and Gann tend to at least establish, in my mind, Victor, parameters in risk controls. There is no holy grail. I would say this. And, the golden ratio, or 5/8, as you said, I like the 61/8 fib number myself. I call it, that's known as the gold. I don't call it. It's called the golden ratio. But that works very well for me, that zone. And that really sets up very nicely on any time frame, on any vehicle, any time, anywhere, any place. Whether it's Beanie Babies or whether it's crude oil futures. I read, and it's the same. This when it comes to sports. You start winning 12 in a row. I want to play the underdog against you because I'm going to be betting against the homers who are always taking the home team and betting the favorite. But I can win by winning less just by playing the underdogs. You know this as well as I do.
Yes. The way to look at it for me is there is no holy grail. These are interesting methods that I've run across over the years, which I find fascinating to investigate and learn more about. And Gann was all about cycles, and I know you've mentioned cycles in your trading observations. Gann felt that cycles are meant to repeat over and over again, whether it's the Phoenician times or Egyptian Pharaoh times or present. These cycles will not go away. They will not change, no matter whether there are quants out there running machines all day long against the market, or new strategies come about. But there's always this natural cycle that's in the background.
So here we are again, August. Give me some broad painted, what you see, your own 2 cents, Victor. We won't hold you to it.
No problem.
We've got an election year now, a quarter and a year away. Where do you see? Give us some targets on the broader indices, or give me something that maybe that you're thinking about that nobody else is thinking about. What's your original thought of the day?
Well, there's a rule that Gann would use to determine what the main trend is and whether it's changed or not. And right now, if you look at a daily chart or a weekly chart, Gann would say the main trend is still down. On a weekly chart, he would say that. On a daily chart, because of today's action, and we want to eliminate yesterday's trading because that's considered the inside bar.
Right.
If you look at the daily bars, you'll see yesterday was the narrow range. So he would not count that, but he would want to have 3 up bars to start thinking about that the trend has changed to the upside. And so we don't have 3 yet. We have 2. We only have 1 actually.
Yeah, today.
Right, excuse me. So we're going to be looking for a further decline if that third bar doesn't develop.
Yeah, so again, and he says 3 in a row typically, doesn't he?
Yes, he does.
So again, you're talking a daily chart time frame. So today is 1. So by Monday, if we haven't had 3 days in a row again, all bets are off for now at least, and maybe we'll go test that 1077 maybe one more time.
That's right. I think we're going to try testing it again. Even longer term, during the cycle, longer term cycles point to not a bottom in 2011, but a bottom maybe in 2012.
2012. Okay.
2012.
Any price targets that you would see if that were to play out?
I don't have a price target yet. I'll have to get back to you on that one. I think that if we fail the last Gann angle, which I posted on the web, on my Twitter posts, we could go down to Dow Jones 10,000 next. Remember we talked about
that. Well, again, I'm kind of in that 1,000 camp. The 1,000 camp, midpoint again, 666 to 1370. Not quite. It's right around the 61.8. So makes sense to me. I can see it. Simple stuff. When you draw that 666, 1370, what does that give us? 7. We'll call it 705. So 60% of that's 420. That takes us right back down to about 950 or so. I can see it. And there's a lot of support lines besides fib there, so something to think about. Again, it's trader's market. Find a good CTA like the folks here at PNW and see what they can do for you. But appreciate you coming on, Victor. And we'll have to come on more and talk more about Gann and Murrey in depth if you'd like to do that.
Thank you for inviting me. I appreciate it, and it was very nice of you to do that. Thank you.
Okay.